hey, and welcome to Insurance Town. I'm the Mayor, Heath Sheeran, and the host of this podcast. Guys, I am super pumped that you are here. Guys, I can't wait for you to check out this episode. It's a fun one. It's quick and it's got a lot going on. I couldn't believe, how much there was packed into this episode. So, guys, I can't wait for you to hear it. And I could not be more excited about this episode. And I could not do this episode without my sponsors. Smart Choice and Canopy Connect and Manscaped, Old School Marketing. I've got some new sponsorships coming available. I can't wait to tell you about as we get into 2024. Smart Choice is a network of over 9,700 independent agencies and over 120 carriers. Their agency partners represent more than 11 billion with a B in written premiums. They are the fastest growing agency network for a reason. Their agency-friendly contract puts agency partners first. Not last, not second, but first. Grow your book of business, increase your revenue, and be able to put your own clients first by partnering with Smart Choice. You can't get any better than that. Flawless. Nailed that one. Good job, Smart Choice. Thank you so much. Go to smartchoiceagents.com. Guys, also my friends over at Canopy Connect, I couldn't do this episode without them. One-click solution to getting those deck pages, loss runs, driver list, vehicle list, everything you need to quote your prospects and make their customer journey that much better, make your agency that much better. No more second guessing, no more guessing, no more following up 100 times to get the answers to your questions. Go to usecanopy.com/Heath and check it out. You're going to want to make sure you get that discount, make sure you get that demo, make sure you do all of the things. I love my friend Toga and his crew over there at Canopy Connect. Now, guys, I can't wait for you to check out this episode. My man, Todd, what's going on, brother? How are you?
Heath, I am happy to be here. Thanks for having me on.
Yeah, dude. Welcome to Insurance Town, man. I'm glad you're here. It's been a while. We've been friends for a little while now and never had a chance to get you on here. So I'm glad we're able to do that.
I was just trying to think before we hopped on the last time. Was the last time we connected, was it Colorado?
Maybe. I thought we were no, you and I hung out in Key West.
Oh, that's right. That's right. We were down there for David's thing.
Yeah. So, I mean, there's worse places to hang out.
Key West was a good time.
Yeah, dude, that was a good time. A very good time. Are you a warm weather guy? Or are you more of a cold weather guy?
Definitely warm weather.
Yeah.
I don't know why. I love warm weather, but I live in Iowa, and so it's 30 degrees right now. We've had rain, we've had sleet, we've had a little bit of snow. Nothing's really sticking, but I could very easily head south for the winter someday.
Yeah. Soon. Yeah, I hear you. I hear you. So, everything good in your world as far as wrapping up 2023? Everything go as well as you wanted it to this year?
2023. It's interesting. My wife and I were just talking about this. It was probably one of the biggest years of change in our personal life, in our professional life, in our family life. I sold Thams Agency, which is our legacy family business that was around for almost 90 years, in the fall of 2022. And then 2023 brought about the purchase of a new business, additional growth in Mod Advisor. We had our first grandchild in March.
Wow.
My daughter got engaged, and then shortly after she got engaged, we found out that she is also pregnant. So we've got a wedding here in a week.
Wow.
Life comes at you as you get older, faster and faster, and you got to be able to deal with it. So
that's a big year, man. Do you, there's whole conversation out there about change management. Do you guys feel like you handle change pretty well in your life?
I think we do. I think my friends and family tell me I have an uncanny ability to handle stress and change.
Yeah.
And I guess I must. It feels normal for me to have stress. I don't know what it would be like not to have stress.
Yeah.
On top of that, we moved. We're selling our house. We're selling our commercial building. So a lot of irons in the fire. But I wouldn't have it any other way.
Okay, so I'm a type of guy. My wife gets mad about this sometimes. I thrive in chaos. I love absolutely. Chaos. Is that you too?
Yeah. Give me a deadline. Give me a deadline and something to do, and we're going to make it happen no matter what. But, to have a weekend where we sit around the house and do absolutely nothing, I'll go stir crazy.
Yeah, I'm the same way. I love having the chaos and having the people around and like a lot of stuff going on. If it's too quiet, it's weird.
Yeah.
I felt like Clark Griswold over, Christmas break at the end of last year, having, all the family over and trying to get the stuff going and everything. And I was like, man, I thrive in this though. The more, shit that's blowing up around me and crap going on, the better it is for me.
100%. I don't know
Yeah,
any
dude.
other way.
Same way. So let's dive into a little bit of your backstory and who you are, and we'll take a walk down memory lane. If you want to go back as far as you want to, and then lead me up to now, and then I can't wait to get into some conversations with you.
Well, how far back do you want to go?
Man, I don't want to go back to birth. That's a little weird, but we can go back, to insurance career, I guess, or maybe right before that.
Well, let's start with the insurance career. So it's interesting. I didn't really, insurance is one of those industries that most people don't choose. I certainly didn't choose it, but I was born into it. Both sides of my family had insurance agencies. My mom's father had an insurance agency. My dad's father had an insurance agency. And growing up, I swore kicking and screaming I was never going to be an insurance agent. And it's interesting if you follow some of my stuff on TikTok. Prior to insurance, I used to run Arby's restaurants, and one of my worst days was burning down an Arby's restaurant. We had a big tour, everybody came through. We spent 4 months fixing this thing up. Everything was great. Regional VPs, everybody came out, and they left. And you kind of wipe the sweat off your forehead, congratulate your team, thank them for all the hard work. The presentation went off without a hitch. And we got to enjoy that for about 15 minutes before one of the employees comes up and says, "Hey, Todd, there's a fire in the back room." And once again, stress is no big deal. I grab the fire extinguisher, go back in the back room, and I unload it. And as I'm unloading it, flames are licking the ceiling and coming toward my head. And I thought, well, this little fire extinguisher is not going to cut it. And so we evacuated the restaurant, called the fire department, and the school of thought back in the early 2000s was we had glass windows everywhere in a solarium, and they just came through, and one guy's job was just to break every single piece of glass that you possibly could, and then the other team started chopping holes in the ceiling, and the entire thing burned to the ground. Long story short, we found out this is risk management 101, right? So as
Wow.
part of the
Yeah.
cleanup process for the restaurant, we power washed the entire property. So the power washer was a gas motor, and we had a little, 2 or 3 gallon gas can, and somebody left the lid off the gas can when they put it back in the mechanical room, and they put it right next to the gas water heater. And I didn't even see it, right? Nobody
Yeah.
saw it. And so the back door was open that day with all the people coming and going. The fumes were released into the air. Hot water heater sparked, caught the fumes, and poof, that's how that fire started.
Holy smokes. Wow. That is wild.
So that was crazy. So that was the
Yeah.
end of my fast food career. Decided we were going to move back to our hometown, join the family business. My parents needed some help. Quickly found out I liked insurance. Kind of went all in on that. Ended up buying a business in 2012 from our family. I was a third generation owner. And then we sold that in October of 2022 to pursue Mod Advisor full time.
Wow. Okay, so as
There's
we
a lot to
unpack,
unpack right there.
yeah, I was about to say, as we unpack this, I got to go back to the important questions. Do you still eat at Arby's?
Yeah,
Are you an Arby's?
100%.
Are you an Arby's French fry guy? Do you like their curly fries, or do you
No, I
like
like
more of their crinkles?
potato cakes.
Potato cakes. Are you just not a French fry guy? You just didn't like theirs as much.
The fries are fine. I don't know. I like the potato cakes. They're better
Really?
for dipping. And
Yeah. When you said we left the the fast food space, was your wife in that space too? Was she in the insurance business, or were you not married at that point?
no, what works for us is my wife and I believe having a mom at home was key,
Yeah.
and raising our kids that way. And so she was at home raising our daughters at the time. We had 2 daughters, found out we were pregnant with a third one, and we just kind of realized, this situation is not really where we want to raise our kids,
Yeah.
how we want to raise our kids.
Yeah.
So when I came back to work in the family business, I could build my own book. I could be responsible for some of
Yeah.
that, and that was a natural segue into, we kind of started butting heads because I wanted to go this way, and my parents were a little bit more conservative and did not want to make those bold, radical changes later on in their career. And so there finally came a point where they said, "Todd, this is your baby. You own it." And so they sold it to me in the fall of 2012, and away we went.
Yeah. So that's something, I don't know if you know this, but I'm second generation as well.
Okay.
My wife is second generation. Her father owned an agency and just recently sold it. My father's 80, still slinging insurance to this day. And so it's crazy. But yeah, I think a lot of second generation or third generation or generational takeovers deal with some of those struggles of, it's always been done this way. Now I want to come in and put my own stamp on the way things have always been done and change the way things are. Why do you think it's just a generational thing, or do you think it's just they're not open to newer things, or maybe it's just the stubbornness of the younger guy or girl coming in that they want to do it their way and they don't want to be known as, the son coming in or the whatever it might be. What is it you think?
That's a good question. I certainly think some of it's a family dynamic where,
Yeah.
you know, you you have to have a memory of your child of kind of a goldfish, because they're going to make mistakes as they grow up along the way.
Yeah.
And I think as kids grow up and evolve into their own person and be able to control their own destiny, some of those things still get brought up or remembered from the past, so they don't always trust 100%. So you really have to have conversations to get past that and explain why you're trying to do these things, and hopefully they'll make the leap of faith to believe you.
Yeah, that's good. I tend to think, at least with my dad and I, as we were going through this, and I never worked for dad very long. I went my own way really quickly
Yep.
because we struggled hard with it. It ended up causing more family problems and fights than any good that came out of it, just simply because my dad was so old school. I think there's nothing wrong. I implemented a lot of new school and old school within my agency when I opened my agency and sold insurance, because I do think there's a lot to be said for old school, eyeball to eyeball, knee to knee, handshake, kind of conversations more than, whatever, I say hiding behind a keyboard, but, buying leads and some of the newer school ways of getting leads. And I just, I think there's some good to the old school, but I do think second generation agency owners do struggle with some of that. And I just interested to hear, so you kept it for 10 years.
I kept it for 10 years, but yeah, to your
After,
point, our my we struggled.
yeah,
The family dynamic struggled and finally broke down. Um, and it was time to get rid of it. It was time to go do something else.
yeah. And so I'm assuming, you know what that means when you assume, but in your 10 years, or when you're like you gravitated more towards the commercial lines, or was your agency a heavier commercial lines agency at Tam Agency?
So our agency was, when I started for our family business in 2004, it was predominantly, I mean, you got to look at where we live. The agency is in rural Western Iowa, town of 8,200,
Yeah.
predominantly blue collar. There's packing plants and farmers. And my dad wrote a lot of farmers. My mom liked to do the personal line stuff, and they had a secretary. So it was basically a staff of 3 people in there. And I came in, and it was everybody kind of had their own thing. And if I wanted to build my own book, I had to figure it out. And I quickly figured out that I liked commercial insurance a lot more. And that allowed me to kind of stay out of the farm thing with my dad and the personal line stuff with my mother. And so I went out and started writing commercial. And for them, it was a significant change. I mean, all of a sudden we're winning trips, the production is going up, the business is
Yeah.
going up, we're hiring more people, the type of accounts we're writing are getting bigger and bigger. And that's just not something that they had seen and experienced before. And so, when they started, they had a staff of 3. And at one point, I think we had 12 or 13 people on staff. And that was just a lot for them.
Yeah, I can imagine. And so for you, was it something, obviously you did it to differentiate yourself, but it was something you ended up gravitating towards? You loved doing the commercial side of it?
Love doing the commercial side of it. What I found about the small town, though, is the agency that I wanted, the tech enabled, you know, the tech enabled agency to stand out is really hard to grow in a rural town where people can pull their car right up in front of your office, walk 10 foot in the door, and demand your customer's time. And so, no matter how hard we wanted to change our business and maybe kind of diminish personal lines a little bit or focus on some of the larger ag side of things, your day is dictated by who walks in your front door. And that's something that really doesn't exist in the larger metropolitan areas. We
Yeah.
live in Des Moines now. To walk into a shop, you got to drive 20 minutes. You got to walk through a parking lot. You got to go up take an elevator up. And so they don't have the walk-in flow. And in a blue collar town, I would lose Friday afternoons from 11 o'clock on because there would be a steady stream of people just walking in the door to make
Yeah.
payments. And
Yeah.
so you start putting things into place. Well, we're no longer taking payments. Your payment needs to be this. And some people get upset about that.
Yeah.
And I mean, at some point you have to decide, is your business going to run you or are you going to run your business?
100%.
And it would, where I would get frustrated is if we have these commercial clients that are paying the freight that need these touch points and we couldn't deliver on some of those because Jane needs to walk in and make her $38 payment on her progressive policy on her auto, and she wants to talk for 15 minutes to everybody in the office, would just cripple what we're able to deliver. And that was
to your point,
one of my biggest frustrations about small town.
Yeah, I think to your point, I've consulted with a lot of agencies throughout my career, and I think one of the biggest things that a lot of smaller agencies or rural agencies, so to speak, that's a hard word to say, rural agencies, is that they see that as a status symbol. Those people are walking in that door from 11 on or noon on or whatever. That's their justification of, well, we're busy today. We've got this going on. Instead of focusing on that's taking away from new activity or whatever. There's a lot of those staff members out there in those smaller agencies that view that as, well, this is my job. This is what I got to do. I got to take care of these. I got to take these payments. It's part of the customer service. When no, not really. I mean, it is, but you're missing out on the opportunity to grow the business.
Yeah, those daily activity tasks that should not exist. We should have people on EFT. I mean, the basic transactions, and then we actually mapped out our clients, A, B, C, and D, and we found out that a lot of those people that would come in and do the payments, from a revenue per standpoint, were in the top the bottom 3 to 5%,
100%.
But 12 times a year they're coming in and they're sucking 15 minutes a time. Like, it's a negative transaction and you're losing money. And then the conversation becomes, okay, how do we communicate this to our staff, and how do we change our dynamic so that we don't burn bridges in the community that we love and support, but also shift the behavior into the outcomes that we want. And it was not an easy change. And at some point I finally just got tired of doing this. We started building Mod Advisor in 2020, found out I really like that. And I really like the tech side of things. And my favorite thing about this is I get to control the entire pipeline. Unlike insurance where you're not in control of claims, you're not in control of pricing, you're not in control of what the adjuster is going to do. Tech is not that way. You control everything from the beginning to the end. And that for me was really exciting and ultimately led to, the sale of Thams Agency.
Yeah. Was that, as far as, being in the family for however long that you said that was that an emotional situation, emotional decision?
It was. There were a lot of factors that came into play. All of our kids had graduated. They were not moving back to the small town. Our travel schedule was more crazy than it's been before. And so the closest airport for us is about an hour and a half away. And so every time you want to go to the airport to travel to a conference or do anything, it's an hour and a half bookend on all your travel days.
Yep.
And so it just kind of came a point like, well, what do we want to do? What do we want our life to look like? How do we want to support our kids? How do we want to see our grandkids? And we had to make some changes. My kids were not coming back in the family business. We did not have anybody to really take it over and perpetuate it. So the buyer that we were looking for was going to be able to help with that. We wanted the new buyer to retain our staff. We wanted them to treat our clients well. And ultimately the company that we sold to is out of Omaha. Their family owns banks. They also own an insurance office, and they're very well respected. They win awards for how they treat their employees year. I see their employees work there for their entire lifetime. So I know that they're a good company. And so while it was kind of a bittersweet moment to sell, I also knew that the new buyer was going to be able to take care of our clients and our people the way that we had in the past. And so for us, that made the transition a little easier.
Yeah, I can imagine. That is always, a tough part when you come in as the next generation and then you sell the agency, and that's a closing of a chapter in your family of this has been our legacy for, would you say, how many years did they say it was in?
So it started in 1933.
Wow.
So
To think about 90 years of the legacy of the Thams family.
So here's something that's really crazy. So it was actually started by, this is nerd family stuff for us. It was started on our family farm back in 33. My grandfather sold crop insurance.
Yeah.
And back then, and I didn't even know this till probably 20 years ago, back then, State Farm was not a captive like what it is today.
Oh, wow.
They had a State Farm contract. My
Shut
grandfather in the 30s had a State Farm contract, goes to serve in the war, comes back, and the lady who he entrusted while he was serving our country, when he gets back up and takes a State Farm contract, the clients leaves, starts her own business, and he had to rebuild again.
Oh my gosh.
I mean, you talk about the grit, and that generation was absolutely amazing.
Yeah, they were. Yeah, they were. That's a fun story to think about that, and having to come back and start over from serving our country. Like I said, that's wild. So, okay. At that point, you said small town, and I love small town life. I do. I think it's fantastic. But
when I started my insurance career, I took a huge pay cut to go back and work for my family. And so if we wanted to eat and we wanted to buy things, we had to sell insurance. And I did that by selling anything that I possibly could in our community.
Yeah.
Well, that's the path that we started initially. And then as we got into commercial, we still had these personal and farm and some of that other stuff, which it detracts and limits what you want to do in the commercial world because it takes away your time, right?
Mm-hmm.
And so the mistakes that I made being a generalist hindered my ability later on to grow. And then you have to figure out, how do I transition these clients? Because they still want to call you. You sold them the policy. They still want to talk to you. You built that relationship with them, but you kind of want to get rid of that relationship because in terms of where you want to go professionally, it's hindering your ability to do some of those things that you want to professionally. So if I had to do it all over again, 100%, I would pick 4 or 5 things that I like. I would go vertical and I would only do those, and I would cover a multi-state area.
Yeah, dude, I completely agree.
You'll go farther. You'll go farther. It might take a little bit longer. That first year, it might be slower, but over the life cycle of your clients, your career, you'll be amazing.
Yeah, I just think it just makes total sense, to be able to do that because you can, develop the trust and develop a rapport and develop, expertise, so to speak, in a particular niche. When I first got in, one of the things that my dad transitioned more into employee benefits and that kind of thing. And he was really big into niches. And that's how I came into the business, was like, here's a niche that we've developed, go after it, get it, or here's an opportunity for another niche, this carrier's strong here, go. And so I didn't know any other way, but the more and more I got into it, I was able to become that expert there. And I believe in that philosophy that agencies can and should find whatever that niche is, whether it's, I see a lot of them. The first one I see people gravitate towards is like trucking or maybe churches or restaurants or some of that low hanging fruit, which is great. If that's what it is, go for it. But I think you can even be more, if you can get more micro, so to speak, or more specified in. I had developed a niche at another company I worked with for water well drillers, very specific niche. And, you would think that's so specific you can't make money at, but no, there's, millions of dollars in premium out there to be made just in Arkansas. And so then we started doing that niche in other states. And I'm a firm believer in, if you're going to navigate through this hard market, because I don't think this hard market's going away anytime soon. I believe it's here for a little while. Then you should definitely go into a particular vertical.
I don't disagree with you 100%. And I think if you do that, like if you only want to write the water well drillers, you know what to expect on those renewals. I saw a post today in one of our groups. Somebody's got to do a 3,500 policy rewrite. And that means they're a personalized generalist.
Yep.
Like that, my mind, like I don't even know how you do that. I
Right.
mean, you're rewriting 10 accounts a day on top of all the policy changes, on top of all the
Yep.
renewals, on top of all the billing things, on top of all of the other clients that you have. That's a tough, tough business. It's low premium, high touch, lots of work.
Yeah, I completely agree. And I even think, people say to me, well, Heath, I'm in personal lines. You can't really, but you can. If you find that you've got a niche, whether it's in, high value or low value or whatever it might be, you could still find niches within there too to focus on. And then if you do have that many clients, then at least you have that niche there. It'd be easier for you to move those or to talk that language or to figure out which ones are profitable, which ones aren't, which ones you can make changes and risk manage, so to speak. I think there's niches to be made there too. Cool guitar riff, right? Go to manscaped.com, scroll to the bottom and click discounts or whatnot, and put in the code MAYOR, 20% off plus free shipping. You're not going to want to miss this opportunity. Also, I talked about him on my show this episode here in a few minutes, probably. Old School Marketing. I can't wait for you to hear more about them on the show. We'll get out of the way, but you got to check them out. OLDE schoolmarketing.com. Back to the guitar riff, back to this episode.
I think 3,500 policies. How do you communicate that? Is it text, email, walk-in,
right.
mail? I mean, every one of those people wants to be communicated differently. Whether to go back to what you said, if you're niching out, your clients are going to be dealing with you a specific way in a specific format. You're going to have the expertise to service them. You're going to know what the markets are. It's going to be easier for you to navigate that.
Yeah. And I think you could even within this marketplace, I've talked to agencies just over the last couple of weeks, even as we were ending that 2023 of looking for niches in 2024, even like coverage niches of people that say, I'm only going to write workers' comp, or I'm only going to write, auto or property or whatever it might be. Not only, but that's going to be their driving force of their marketing of like, hey, we've got this carrier that's really hot in this particular line of business, so to speak. And so I'm even seeing people niche even further down in the line of business. And I don't know if you've seen that or when you were an agency owner, if that was something that popped its head up every now and then, or if that's something totally new to you too.
I'm a little bit removed from that right now. I mean, my niche is all things workers' compensation right now.
Exactly.
I see a lot of cyber popping up. I mean, that's
another one.
That's a line of coverage that's changing drastically all over the place right now. My niche is all work comp.
And that, I think that's one that so many commercial agents, especially larger, we mentioned David earlier. He's based a lot of what he does on the workers' comp and, finding that, the holes or the needs there or doing the risk analysis or being able to provide, because there's so much that goes into comp. So I think that you were wise in going into that niche because, you aren't dealing with most companies' largest expense, which is people. And, if you can protect that large expense in your staff, your people, your employees, whatever you want to call it, I think it's a smart move on your part. And so as you've dealt with agencies in that niche, I guess first of all, I'd like to know how if you can give me 30, 45 seconds, a minute and a half, whatever, on how you decided on comp and, Mod Advisor and where kind of the origin story there for a minute, if you don't mind. And then we can get into a little bit about what Mod Advisor does.
My experience was, in rural Iowa, as we would reach out, most everybody has a good relationship with somebody local in their community.
Yeah.
They go to church with Bill, they see Jane at the supermarket. So for them to break that relationship to hire you, you've really got to bring value.
Yeah.
And you've got to do something better than what the incumbent broker is, because they're friends with that person. They go fishing, they go hunting. There's a million different reasons on why they are together. And so even mediocrity will be okay in the sale because they're friends and that's just good enough.
Yep.
And so I started focusing on workers' compensation as a way to educate people and talk to them about their experience mod, ways they can control their workers' compensation premium. And I would just be transparent. Um, I think workers' compensation is a line of covers that most people tend to gloss over, and they tend to think it is what it is. And, here's what the carrier gave us, and maybe we can credit it 10 or 15%, but I really can't do much more for you on your work comp than this. And that could not be farther from the truth. To your point, it's typically one of the largest expenses on their commercial insurance renewal, roughly probably 50 or 60% of their overall package, depending upon what type of industry they're in. It can certainly be controlled. Carriers have all different levers that they can pull to either inflate or deflate that premium. And the experience mod factor is just one component of that. So when you kind of pull the curtain away and open it up and show them, here's how they're rating you, here's the impact of your experience mod, here's the impact of claims, and then you really break that down in terms of a monetary value, that for me was a winning strategy to help educate these business owners and win their business. And suddenly it wasn't about, hey, I still like Jim and we're going to go hunting. But the fact that I'm paying 40, 50, $100,000 more for workers' compensation and I can reinvest that money in my business, that relationship's not worth that kind of money to me right now. And so that is how I started winning business in rural Western Iowa.
Wow. And so that led you to Mod Advisor?
It did. Mod Advisor was built out of my own need. I wanted something to take an inherently complex formula and really simplify it down. And even as I do demos and I talk about this, imagine you're sitting in a room with 5 or 6 people. You've got the CEO, the CFO, maybe you've got the HR person there. And some of these people have never heard what you're trying to communicate to them. I mean, HR may not know what an experience mod is, and they're the ones that are controlling and are responsible for reporting all the workers' compensation claims that come through. They're responsible for the return to work program. They don't understand the value. And if you're sitting in that room and they don't understand what it is that you're talking about, they're certainly not going to open up and ask questions and appear to look like they don't know. So they just sit there and they'll be quiet. And so I wanted a way to bring reporting forward that you could leave behind, and anybody in that meeting could take it to a third party and explain what it is that they meant. So we're trying to take something super complicated and really dumb it down. And so a lot of our reports are built around the green, yellow, red. I mean, if you're looking at a loss, an experience report with 3 policy periods and they're all red, it's not good, and something needs to change. And so that's an easy thing for us to communicate, and that's why I started building Mod Advisor.
Yeah, and was it one of those things that quickly resonated with the industry once you came out with that, or did you have some initial competition that you were able to navigate through some of that, or was it taken pretty well?
So our initial product was taken pretty well. We got picked up right away by Broker Tech Ventures. We were part of their 2022 cohort, and for us that was huge.
Yeah.
When you building a startup with your own capital is true entrepreneurism. I don't know if I'm pronouncing that right.
Yeah, you got it. We're good.
Whatever, it's a word. And so I'm sitting in the Holmes Murphy office in West Des Moines, and you've got 25 different representation from insurance carriers to insurance brokers. And they all have the same problem that I did. Every single one of them. And they're like, but here's the problems that we have on a grander scale. How do we get data into the system? How do we customize it? How do we do all these things? And so I really listened to what it is that they had problems with. And we kind of did a little bit of a pivot in our system in 2022, rebuilt it from the ground back up in 2023. And just last quarter launched we still have our base core Mod Advisor platform, but we launched an entirely new API-driven, business intelligence integrated bond analysis platform that can be customizable from the top to the bottom for all of our end users. And the meetings that we're having and the interest that we're getting right now is absolutely crazy. And so the coolest thing that I had happen was earlier this year. We actually had a client send us an Excel list of about 2,000 clients, and we intook all that data and produced 2,000 mod files overnight.
Whoa.
Custom reporting, custom logo, custom branding, custom deliverable, exactly what they wanted for all 2,000 of their clients. And that doesn't exist anywhere else in the marketplace today.
No, and
So,
that, go ahead. That's
no, that,
incredible.
like, it gets me super excited because
yeah.
what we built to the beginning was good enough to compete. What we just released is a winner.
I mean, imagine, wow, the value that brings to that agency, of that many overnight. Like I can understand if you said a week later, still impressive, but overnight.
Well, I mean, there was 2 rounds. Hey, send us the file. We'll test it out. Is this what,
Yeah.
and then we validate to make sure some of the formulas are right. Is this what you want? Then send us the entire file. Boom, done.
Jeez. And so I just think, back to, Mod Advisor, what you guys are doing, what you guys have built, what you're up to, as people are navigating through, like I said, the hard market, building out their niches, talking about some of these things, it's no longer sale based on price situation. No longer can you do that.
Nope.
If you're selling based on price and price alone, you're in a large bit of trouble. I think that you've got to be able to provide some sort of value. So to be able to go in and explain that mod, or to be able to show them changes they can make or improvements they can have in their business model to improve certain things. And again, in your case, the workers' comp, to be able to add in programs, to be able to add in this or that, or do OSHA trainings or whatever it might be, to be able to lower their mod, which then lowers their price, all the different things. I think it's massive. And I think that I would love to hear you talk a little bit more about, people are listening right now, whether personalized agents or just hadn't dove. I think that's the word.
Entrepreneur.
Dove deep into workers' comp yet. Maybe explain quickly what mod analysis is, and then why it's so important. But then maybe talk a little bit at a high level, so to speak, of what you guys are doing in that arena, because I think it scratches a huge itch there.
So yeah, I get this question a lot. Like, who needs mod analysis? And it's not designed for the small accounts.
Right.
It doesn't really matter.
Right.
I get some people that maybe they want to go from personal to commercial, and they're just now starting to write $5,000 and $10,000 work comp policies. While we have a resource library that can help support education and return to work programs and things like that, really, you're not going to see value in what it is that we do, because you can't bend the cost curve enough for your client. You can't take a $5,000 policy and make it $1,000. It just doesn't happen. But you certainly can when you start getting upwards of $200,000, $300,000, $400,000. And you look at the different, carriers have different rating companies that they have preferred rates to not preferred rates. And they can start building out their predictive analytics in terms of losses that a client has had before. We model out what those losses are in terms of an experience mod, which is a number that reflects their historical safety. Personally, I'm on a mission to change that. I'm tired of mod analysis being like looking in the rearview mirror. And we do nothing to help businesses when we sit down at renewals in 2024 and say, let's talk about what happened to you in 22, 2021, and 2020. And this is why your premium is X. And they're like, why didn't somebody tell me when these claims were occurring what I could have done in 2021 to save premium today? Coupled by the fact, and we can get deep into this, NCCI just changed the algorithm for every single state in the country. Each state now has their own specific split points, their own unique rating values, and that's moving the mod. So if you're a business that has had high dollar claims in the past and frequent claims, your mod's going up faster than it ever has before. So not only is it a hard market, costs are increasing, businesses are shopping for insurance. You're seeing carriers pull out of the market. It's becoming more restrictive. Now we can talk about how comp has historically been profitable, but comp in a carrier's overall book of business is probably propping up some other lines that are not profitable right now. So it's account packaging, not necessarily how do we look at each line of coverage on their own and get the best deal. And I don't know, that was a lot to unpack there.
No, I love, first of all, I love that because there's a lot to unpack. I was trying to write it all down so I could make sure I remember it all. But I love that you brought up not looking at it from their review, because I think you're right. Too many, and I'll say this right now, the citizens listening, your competition is most likely coming in with that review mentality of let's look at what happened. Your rates are going up. Let me explain why your rates went up 20% or 30% or whatever. It's because of da 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 da. And you're coming at it, they are, and you are too, if you're doing this, coming up from a negative standpoint and not bringing that value, where you could go in using a good mod analysis or using Mod Advisor to be able to say, here's what you can do in the future. Here's what I love looking at it from, forward, moving forward, how you can do better. And then you're, like I said, you're providing a service, a value. You're doing more risk management. You're doing something besides just selling on price and what happened in the past. I love that mentality. I love the way you're looking at that, because, and maybe I'm wrong. Maybe I'm still, because I haven't sold in a few years now, but I could see, and what I used to do and what I advise people on is looking at ways to prevent what happened in the past. People say, hey, it looks like Jimmy is, causing a lot of the problems with your auto policy rate. He's had this many wrecks, this is going on here. Or Tommy, this employee has done this, and this, or Sally is this, maybe you can look at it from specifics there. Or there's a frequency in this type of loss. And I'm sure there's things like that you can, be able to provide that data insights there.
Well, let's take that one step farther. Now that we're, with our new platform, we can integrate with businesses directly, and we can start providing claim advice at the time of claim. Okay. And so for the first time ever, you can see the impact of maybe some claim engineering where we keep the claim meta only as opposed to indemnity, or we bring somebody into work 5 days earlier and we put in a return to work program. We can model out all of those things today that are going to affect future premiums. And so if you're, I mean, think of a company that has to justify budgets, HR, what you're doing, and we've automated some of these things for you. And HR says, hey, I went ahead and we processed these 15 claims over the last quarter, and here's how we engineered them. We brought people back to work. These are the things that we've done and the procedures we put in place. And according to our analysis, this is the premium or the impact we're saving on our mod in the future. Though, like, that's real world action today. And it doesn't require cameras. It doesn't require wearables. It just requires a little bit of action at claim time. And so part of Mod Advisor's Solution Center is a ton of return to work programs, just to help people get ideas about why we want to bring somebody back to work, why we may not want to let the insurance company let them, keep them on an indemnity wage thing for 3 or 5 days. What do we do on these small indemnity claims? How can we bend that cost curve down? There's a lot of levers that people can pull to keep their mod score low, and that's the direction that we're going to take this thing.
Yeah, and I'm interested to take this question. I want to hear your answer to this question of, like, people talk about return to work programs. They talk about that and how important that is. And I used to get this question a lot from my clients of, like, okay, well, like, what's some advice that you could give out there to what a good return to work program looks like, how to implement that to make your clients, have that incentivization or, get their employees to come back to work, to want to return to work. Like, what's some advice you can give out there maybe on that? Or do you have any? What's a good return to work program look like? What?
So I think return to work programs are unique based upon the business. And certainly not everyone is going to be able, they're going to be off work for a period of time, knee surgery, shoulder surgery. You're not going to be able to bring that person back to work within a week of that surgery. They're going to be home. Sure. So those claims are what they are. But I certainly think that there are a lot of claims where people take a back seat and let other people drive the claim. And so putting in a preferred provider program where your injured worker actually goes to see a doctor who you've communicated your company's stance on return to work, that's step one. Not letting the doctor dictate how long somebody is off for work for. It is not uncommon doctors err on the side of caution, right? I don't need a doctor telling an injured worker, you need to be off work for 7 days. I need a doctor telling me, what can this person do? Yeah. So they're not off work for 7 days. Yeah. And then it's up to me as a business owner to figure out if we have a job accommodation to do that. And so there's step one. If they're going to be off work for 7 days, there's nothing that says my company can't keep them on payroll for those 7 days to engineer the claim to be met only.
Okay.
I mean, there might be a value in that. We actually have a case study in our solution center that talks about an employee or an employer that did that exact same thing. He knew how long the employee was going to be off work for. We modeled out the claim impact. We modeled out what it would be if the insurance company wrote the check to keep the injured worker at home or the employer wrote the check. And it was a no-brainer for the employer to write the check.
Wow. That's strong.
So, I mean, you really got to get into the weeds of, claim engineering. How do we want to handle claims? What makes sense? What are the, do we want to bring people back to work? Why do we want to bring people back to work? We're actually working on a report right now inside of Mod Advisor that uses state average weekly wages. And then we'll take the unique data from a business and look at what would happen if you brought somebody back to work 3 days earlier, 5 days earlier. How much would that cost based on state average weekly wages? And then you can plug in a couple other numbers and say, if you chose not to do this and your mod goes up by X and your premium goes up by X, how much more revenue does your company need to generate to cover that? And that sometimes is a no-brainer, like to do an extra $300,000 in sales to cover what could have been a med-only claim or a reduced claim cost. I mean, wouldn't you rather generate the $300,000 in revenue and flow that through the bottom line rather than pay increased work comp premiums? So I know I got you thinking over there, and I see the look on your face, but there's a million different ways to slice and dice this, and it's so complex. What we're doing is we're taking it and we're making it simple and automating it.
Yeah, and I also think about you got my brain turning over here thinking about different scenarios that I've even dealt with of even bringing employees back to work at a different capacity. Maybe they can do the exact same work they did before, but at least they can come back and do office type work, or they could do this, or they could do sitting, or something like some other type of work in the same job, but maybe different functions. Does that make sense? So
it does make sense. And so I'll give you an example on that too. How a business begins to integrate a return to work program inside of their operation is key. And I think how people go about it is massively important. And I've seen companies roll it out like the employee was a great worker right up until the day that they got hurt. And now they're just trying to milk everything for what it's worth. And so the employer thinks, I need to bring them back to work. And so I'm going to, have them count bolts in the corner, or I'm going to make them sit here. And it suddenly becomes like the injured worker is being grounded. I actually have a case where a woman I know was injured in the birthing unit, picking up a baby, strained her back, ended up needing surgery. Surgery didn't take, had to have surgery again because the first surgery was botched. And so the return to work program that her employer implemented was having her scan information in the basement in a room by herself. So what was a fun job delivering babies, working with moms and nurses, is now isolation in the basement. Ultimately led to her quitting, finding another job. Now that employer still had to pay the work comp claim, but how they handled that claim cost them more money in the long run, and they lost a 20-year employee.
Yeah.
So we talk about return to work programs. We have to talk about return to work programs in the right position with the right meaning and the right outcome that involves the injured worker in the right way.
Yeah, that's a good point. I hadn't thought about it from that perspective. I just know for me, I was in a bad car accident in 2015 and was off work for a year in a wheelchair. And, I was living off of short-term disability, or I guess long-term, whatever it might've been, but it was only 66.5% of my wages. So I was struggling there. Luckily, I did have workers' comp to make up some of that, but I mean, still I was never able to get to 100%. So the return to work program for me was just my own, like, I need to make money, I'm ready to get back, and
extrapolate that even further. So, how do you play with your kids? How do you make dinner? How are you a supportive spouse? And you're worried about money now, the new financial strains, like injured workers, especially the long-term claims, they undergo a lot of mental stress.
Yeah. Yeah. 100%. And I can remember the little things, like some of the little things that would happen, but not to get off on my story on that. But I mean, I find that the whole return to work program, I think it's overlooked by a lot of agencies.
I don't disagree. So I mean, a lot of the things that we do is we run analysis to show people why a return to work program may make sense for them. And we can show the financial benefits of having a return to work program, but you got to roll it out the right way.
Yeah. Holy smokes. So I just realized how long we've been going. I do want to get into into Mod Advisor. You get two people that like to talk on a podcast, but Mod Advisor, like, okay, so what are some things that Mod Advisor we haven't gotten into that you want to talk about, or maybe some things that are coming out? I don't know what you want to share or not share yet, or if you've got anything new that you can get into, or just based, what we've talked about, what's been going on in 2023 that it worked so well that moved in 2024. Talk to me a little bit about Mod Advisor.
Yeah. So the things that I can share with you right now, our 2024 roadmap, this new platform that we built, and the interest that we're getting across the country, especially from some of the larger brokers, is the ability to automate time-consuming tasks and customize their deliverables. So gone are the days where everybody has to use the standard same report. You can customize exactly everything that you want. You can customize how you want charts to look. You can customize colors. You can customize order. You can customize any deliverable. You can put that on a web-enabled platform or a website, updates every 15 minutes in real time. That is super cool and getting a lot of interest right now. Just that intelligence and that customization side of things. I think, as I mentioned to you before, one of the pains and struggles that we heard coming out of Broker Tech Ventures was, how do we get loss information into a platform, because it's an extremely manual, time-consuming process right now. Part of our API-enabled platform helps solve that. We're in beta right now with several partners ingesting loss information, putting that directly into Mod Advisor and tabling that. So no longer do they have to key in dates so we calculate lag time, or dates to calculate average age of the injured worker. And I think you're going to see that probably develop over the course of 2024 as we go along.
That's exciting stuff, man. That's stuff that hadn't been seen before, done before.
No, and it's crazy. You talk to some of these people and they're like, oh, we outsourced to a VA to key in the loss run information into our system, and it's costing us X amount of money a year. But we don't do that for every account. We only do it for the high dollar accounts or the high mod accounts. That doesn't mean your account that has a 1.35 mod doesn't need a full-blown mod analysis, because you can't really develop a true blown risk management plan unless you know all the risks and all the claims that occurred before. And it's pretty hard to get that from 60 pages of data that's all over the place. So we're going to make it super easy for them.
So a lot of my audience that's listening ranges from the, as you mentioned earlier, your father's shop of three people, to the larger agencies that you mentioned before, that, the enterprise type larger agencies. So regardless of size of agency, is there a use case for a mod analysis or for Mod Advisor, or is it built more for the medium to larger size agencies, or for the smaller to medium size?
Generally speaking, if you're going to be doing any type of mod analysis, you're going to have clients that dictate the need for mod analysis, and you're probably not going to see those in the $500,000, $1 million revenue shops. It's going to be north of that. So we have a couple different platforms that we offer and we sell. So if you're a smaller agency that wants to compete with some of the larger ones and do mod analysis, that's great. We have that product available for you. It's not going to be as customizable and analytical and robust as our key platform for enterprise users, but it's certainly functional in terms of education and, the reports that we deliver and the value that you can see from the reports that we provide.
And
yeah, we want to try and help everybody. But I mean, the grand scheme of thing is, to do a mod analysis on an $8,000 work comp account doesn't make sense in anybody's world.
Okay. So again, the listeners are listening. Is there certain integrations you guys are into right now that are making a major splash in agencies, or like making a difference, whether it's with the AMSs or the CRMs or with other products?
So we're just that it's exciting, but we're just beginning to explore some of those integrations right now.
Good. Yeah.
Up until prior to September, we weren't API enabled. Now that we are, so as we start having all these conversations, people are coming to us and saying, how do we extract information out of our AMS? We have a data lake over here. How can we push information from our data
Yeah.
lake to your software? How can we automate this where we just send you everything and you send us a report back and we never have to touch it? And so there's a lot of unique use cases that we're having these conversations on. And I'm just really excited to see what 2024 brings and how that shapes
dude.
out. Because ultimately,
I mean,
the pain in mod analysis and the manual time, the time suck that it did before is going away.
yeah. I just think, I mean, you already have, you've already had a successful couple year run of this. I think we're still just scratching the surface of all the things that Mod Advisor will be able to do for an agency looking at 2025, 26, 27, and beyond. I think it's exciting.
Yeah, I guarantee you there's nobody in the country working harder right now to make mod analysis more simple than me and our team. And our roadmap in 2024 and 2025 is super exciting, and it's just going to get easier and easier as time goes along.
Does that stem from a passion from you?
I think I just lost you there. What was that?
I said, does that come from a passion that you have for the agent or for workers' comp or for the industry? Like, where does that come from in Mod Advisor?
Oh, I'm 100% passionate about this. I mean, there's no reason a business should have an experienced mod greater than one. There's no reason your business should be not even average. Why? As a business owner, I don't want my business to be below average. And yet we see mod files that come through every single day where mod scores are greater than one, meaning you're worse than your peers and you're certainly not as good as the top performers. It costs a lot of money, a lot of wasted money. It's an inflationary system that every time you have a claim, everybody kind of gets paid along the way. So you need to really control those costs. So I'm 100% in on helping brokers, helping businesses, helping HR people just really become more educated and drive down their costs. Ultimately, awesome. It's the right thing. I mean, we can talk about this in terms of driving down premium, but if your business takes prevention so you don't have claims for your injured workers, holy crap, how awesome would that be?
Yeah. Okay. Quickly, before I get into my last hard-hitting question, ways to get a hold of you, or if they want to connect with you, is there email address, website, a LinkedIn or a social platform?
Where do you want to? You can search for Todd Thams. You can search for Mod Advisor. You can find me on TikTok, Instagram. We're all over the place.
Awesome. So, okay, I have a couple hard-hitting questions for you.
Okay, I'm ready.
Down. First of all, I've heard people from Iowa that talk about this butter cow exhibit thing. What is that all about? Why is it such a big deal?
Well, so I'm not necessarily the best person to ask for this, but it's a cow made out of butter that they make every single year, and they put on display in a cooled room at the Iowa State Fair, and you can go walk by and look at a cow made out of butter.
And why? I mean, why is it such a big deal? I mean, where did that even? I don't know. I guess you're the wrong person to ask. What is the infatuation with Casey's Pizza?
So this is interesting. I actually lived in Ankeny when they first started piloting pizza at Casey's restaurants.
Yeah.
And I think the last time I heard, Casey's serves more pizza than most pizza franchises.
We have a Casey's now in Arkansas, and like people are lined up to get pizza, freaking Casey's. And I'm like, it's gas station pizza. I don't get it.
It's interesting, the pizza dynamic. I mean, growing up, we had Pizza Hut and we had Godfather's, and those were the two places.
Yeah.
And there was an individual guy in our town that had his own pizza place. And then when the two franchises came in, I think they kind of put him out of business.
Right.
But now, like pizza, it's Pizza Hut, it's Godfather's, it's
everything.
I'm trying to think of all the different ones. I mean, Casey's serves pizza. I mean, you can get pizza anywhere.
Yeah. Now,
taco pizza, that's my favorite though.
What?
Taco pizza?
Taco pizza. Okay. A scotcheroo, is that something that you love in your family? We don't have scotch. I mean, people talked about scotcheroos, and I'm like, I've never had a scotcheroo in Arkansas.
Yeah, I think isn't it like Special K with like,
I don't know. I'm asking you.
Syrup and then chocolate. Okay. I don't eat those.
Y'all have a lot of things we don't have, like pork tenderloin sandwiches. Y'all are a big deal on that. Like, and then what you know what a Maid right is?
Oh yeah, loose meat sandwich.
Like, what's the difference in that and an Arby's roast beef sandwich?
Well, so Arby's is like, it's a roast that they slice up, and a sliced roast beef. A Maid right's going to be more like hamburger that's been chopped up into fine pieces, seasoned up, and then they just put it on a hamburger bun.
It's like a sloppy Joe.
It's a sloppy Joe without the sauce.
Okay.
So the sloppy Joe, they'll mix in the
So it's
tomato
just
paste or
ground
some type of
beef on a
tomato
bun.
sauce. Ground beef on a bun, and you season it up. Yeah. The Maid rites. Yeah, I love a good Maid rite.
Dude, I appreciate you coming to hang out and talking to me a little bit. I'm looking forward to seeing what's going to come out in 2024. I'm just listening to this. It's exciting. Good luck with all of that. Good luck with everything going on in 2024 and beyond. Thank you again. I appreciate it.
Heath, thanks so much for having me on. Thanks for hosting the podcast. Listen to it. Love what you're doing. Thanks so much.
Yeah, I appreciate that.
Happy New Year.
Happy New Year.